Okay, but well, a lot of bad news this morning. I realized the macro cues have also been on the weaker side. Inflation has accelerated to 6.5% in January on an annual basis after cooling for 2 months. Now, this inflation is well above the street expectations of 6.1% and above the RBI's comfort zone as well. Latha Venkatesh is here with the impact that the CPI numbers will have on a whole host of stocks. Latha, over to you.
Well, primarily, expectation was it will come at 6.1. It's come in at 6.6 and a half. I mean, about 42 basis points higher than what the street was expecting, 6.52 actually, largely driven by cereals. Now, that's a problem because unlike vegetables, which are, extremely volatile, change month on month, cereals don't change so much. And therefore, the expectation is that it will be persistent. Reserve Bank is definitely going to give a hike in the first week of April. You can see it already in the bond prices and the bond yields. The 10-year bond yield touched 7.4. It was at 7.36 yesterday. Earlier last month, around before the budget, it was 7.2926 actually when the budget borrowing numbers were announced. That's the extent to which it has risen. The OIS rates, overnight index swaps, they are a very clean way to gauge the market's expectation of rate hikes. Those yields have gone up by 10 basis points across the curve, up until 1 year. So the expectation is that the rate hike is definitely already getting priced in, and you can see it in the stock market as well. The entire bunch of realty stocks, especially the marquee ones, as you can see, India Bulls Realty, Soba, DLF, Brigade, Oberoi Realty, what else? Godrej, just every one of them down between 1.5% and 5%, as you can see on your screen.
Okay, all right. Thanks a lot for that. So all the real estate